Good evening. This is the Elliott Wave Daily Update for the NASDAQ 100 and the S&P 500 for Thursday, December the 5th, 2024. I'm going to begin here on the NASDAQ. It actually was a powerful start to the trading day today. And as we saw again, the rotation in and out of different stocks continues. And it just depends on, I guess, what day of the week it is and who's moving what and where the capital is flowing from and to. Today it was back into Tesla, and it actually was a pretty fine day for Tesla. Let me just take a look and see what that volume was in Tesla. And, well, not bad, 80 million shares. I mean, we also have NVIDIA, which is always going to do more. It's almost 170 million, but 80 million shares in Tesla, that's pretty good. And quite the range. Opened at 359, traded up to 375, and basically finished the day at 369. So solid day. We'll see if that's going to continue because I know for a fact that when you're looking at what the gamma levels are, the call wall in Tesla, at least it might be changed, but I think for this Friday, it remains at 400. And maybe they were making a shot to try to get it up there and give it the old test. And it also could be the December expiration is going to rally around that 400 level. We'll wait and we'll see. In the meantime, though, it does appear that this minuette third wave did finally come to a close, reaching up to a resistance level that we had at 21,567. And that high for the day was actually 21,567.25. So it basically hit it on the nose. And again, this particular resistance level is again associated with the irregular B wave. So in other words, it goes with the alternate versus with our preferred count. We kind of sailed a little bit through some just a little bit lower resistance. So I don't know if that spillover really is going to pertain to this being an irregular B, or it just was a little bit of an overthrow, and now we come back down into it. So I'm going to leave this as a minuette third wave completing up here at these highs that we saw today. It was a decent start to the pullback. The initial was like very strong, just kind of came straight back down. But what kept it fluctuating up and down, of course, was again Tesla. Tesla didn't really sell off, although it came down off of its lofty heights at where it was, but only $6. So it was about up 17 at the height and now finished down up 11. So still, we'll see how this all plays out tomorrow because I think it'll also shift yet again to what becomes more interesting. Now, tomorrow is again an expiration. So if we go and we start looking individually to what we see, then, it's going to change a lot of things. So I think that what we're looking at is interesting because there was used to have my account number. Now it seems to be gone. I guess they decided not to show it, which is fine. So let me put this up here. In any case, what we got going on, I think we're starting to come back down in a minuette fourth wave. Now, this is all a part of the minute fifth wave. So this is the preferred count, okay? So the preferred count is that we're still within this minute wave 5 up. We're coming back down in a fourth wave. I've put our markers in for where that fourth wave could come in. And the normal would be 0.382, and that takes us all the way back to 21,226. And I say all the way, right? It was only just on Tuesday that that's where we were. And now on Thursday, we were quite a bit higher. So to bring it all the way back down there may happen just as quickly. So, but the first stop should be around 21,355 to 60. And we have the hourly 50 and that comes in at 21,416, 21,416. That also is going to provide some support. A break there could give it a good shove, and then again, maybe goes through that 0.236, works its way down to 21,226, which is the 382. It should come off in an ABC. And if I take this down to the 15-minute chart, take a look at what we got going on there. You're going to see that it's probably being count 1, 2, and then we got this 3 and a 4 and a 5. Or to be honest with you, A, B, C. I'm not going to count it that way, but it's that we got to leave it out there as a possibility. So it's going to be interesting, but here we have what could be a little bit, kind of looks like a diagonal in some ways. But I'm kind of looking for an ABC down, and this is looking like it's going to start and pull in as a 5-wave A. So it'll be a zigzag, and that would bring us likely down into here, I would think. Now, tomorrow we have non-farm payroll, so we have all that employment data to kind of cap off the week. And we'll see how they want to interpret and actually what it does. The market kind of continues to keep a more positive tone. And of course, the media is going to talk about, well, Jerome Powell's speech was a little bit more dovish and it was hawkish, and that kind of gives everybody this really good feeling, and then blah, blah, blah. I don't think any of that really has anything to do, and it's more about the capital flows, the gamma flows, and all of that nature. We continue within the ETFs to kind of break above call walls. So they're getting shifted around quite a bit, and we'll see where they kind of come in tomorrow morning. Both that would be in the spiders and the Qs, and then also the SPX. Now, the SPX had a fairly good day, and we are now not necessarily substantially, but we are above that JP Morgan collar on the call side, which was at 60.55. We got above that today, and that was on these are all on downtick, so we actually did that yesterday. And nonetheless, I think that we'll come back in a 4, and then we have that 5. So as I've been talking, I think we are closer, of course, to completing this. And if I pull this up, it continues to point up towards these levels here, 21,665 to 21,720, I'm going to call it. And that's our little resistance cluster right now. The orange is the minor, so that's minor 5, and that would be the intermediate third. And both can come into play, or even actually above these could come into play. Once we're done with the 4, I'll run 1 to 4, and we'll see what that looks like and where that brings us into here, or maybe a little bit above. And again, at this juncture, it continues to be structure. So that's why I'm being very careful about how I'm counting all of this out and keeping it in the preferred that we're inside minute wave 5. The alternate count continues to suggest, but today we reached that irregular level. And we turned lower right off of it, to be honest with you. So I cannot count out as out of the picture the fact that if this is wave A of 4, and this is now wave B of 4, and an irregular at that, and we come all the way back down, and then we'd be looking for it to come back towards at least this low at 20,377. I would have to replace those others, but they were not too much further below, but still above 20,000 to finish this 4, if indeed it is the alternate that is in force right now. So again, I'm kind of looking for it to come down in an ABC, reach into these levels right in here. If this is going to flip and we're coming down in a C wave, then we definitively want to see some 5-wave structures. And if I bring this back down to that 15-minute chart and open it up, they could be developing. But again, what we're looking at is 1 and then 2 and then 1, 2 and then 1, 2, and then a lot of power could come back in here. But I think we're going to have total participation. In other words, we're not going to have 1 or 2 of the Mag 7 or even of the larger, the heavier weighted stocks in the NASDAQ going in one direction while the rest are going in the other direction. I think if we're going to have a stronger decline off of that high than everything participates. As we did basically when it started. This was full participation. Then it started to wane, with Tesla pulling it back up here and there. Let's take it back out and take a look at that daily, because that's where I check in with our moving averages. And we're still looking actually very, very good. I mean, that is a red bar, nothing too much to get too excited about. And we still have the 8 pointing up, the 20 pointing up, the 50 pointing up, and the 200. These are gaining a little bit, losing some of the altitude, looking like they'll probably start to go flat if this continues to sell. Now, if I bring it down just a notch, we'll look at it on the 4-hour chart. We see that we had the 8 actually turn and get broken today, but no big deal. It's only in the 4-hour, and it should be more sensitive, but now it's starting to turn lower. The 20 beginning to turn a little bit flat, 50 doing the same thing, and the 200 just kind of cruising up. So the moving averages out of one day are not looking all that severe. So we're going to keep things in line that it's going to be a correction, and we still have one more upside to complete. Over in the S&P, also did the same thing, but again, it just kind of came up. It didn't really, maybe just a little, 6,107.25. So yeah, it did kind of poke its nose above the 104. So it got a little bit higher high today, and that is actually where I need to just move this guy over one, because actually it did take the high. So that's perfect. So here as well, I have marked it as the completion point, today's high, for the minuette wave 3 of minute wave 5. So that would suggest we're going to start to drop back, and we are. And in fact, into the close, and right now the market is attempting to get back above the hourly 50, which sits at 80, where are you? 83.72, and the market is trying to close above it. And right now it's at 85.75. So they're trying to keep it above that 50. Gives the algorithms a reason to kind of come back in, okay, buy it, or whatever the situation might be. But getting the close to try to look a little bit more positive than what it is. Now, what do we got going on? I think that here as well, we went up again, but we hung out and stayed within the realm of the alternate count, which continues to rally around and stop just above the resistance level at 6,100, and that would be for the irregular minuette B of minute wave 4. So same deal. This would be wave A of 4 down here, and this would be B of 4. And then we'd be looking for it to come back. And here are the markers for that one. We have 58.23, and we have 57.52. As that 382 and 50% are the markers for that minute fourth wave, which right now, under my preferred count, I'm counting as complete at the November 19th lows. So we're working on that. If it's going to be the alternate, it should come down in 5 and to keep going. So in other words, it's like we should start to pick up a little bit of steam, because it would be a C wave coming down. C waves are like thirds, and that they can be very powerful. And I'd expect it to pick up some steam and to start to coming down a little bit harder than what we have seen thus far. And so right now, again, we're right above the 50, the hourly 50. And then as far as markers for a wave 4, again, zigzag. We have 0.236 at 60.60. We have 382 at 60.30, 31. And we have the 50%, which I include, but I really wouldn't be looking for in a fourth, at 6,007. So I think it's very important for the structure and also for the market to reach up into new highs that it should hold above 6,000. That's basis the future. Be a little bit lower because the future is giving up more premium as we get closer to the December expiration. So, and that's really kind of it for today. Trading wise, it in the NASDAQ, it was very, very choppy. In other words, because we had several stocks, including Tesla, just gangbuster going on higher, and then it would slip and come all the way back down, and then rally it all back up, and they bring it all the way back down, and then rally it up. And so it was not necessarily in sync with the other markets. It was just kind of off on its own whirl. Um, but if you kind of could stick with the trade and manage that risk, because even using a one lot, you were watching it go up and you're up 100 or 200 bucks, and then suddenly you're down 300 or 400 bucks, and then coming all the way back and coming all the way back. So it floated very freely, um, by a lot more than I think some people may have been comfortable with. And I just want to go out and take a look at that daily. And we're going to take a peek and see how this all looks for us. You can see on the daily, it is a beginning, but it's not really presenting us with any challenges, at least on that daily chart. We were looking for it. And so we get the 3, and then we do a 4, and then we still get a 5. Now, again, what we're looking at here is the possibility there, same deal, that this is an irregular and that we're going to come all the way down. If that's the case, and now that we've reached that high and we're making the turn, it should begin to pick up steam. So in other words, we come down with more force as it works through a 5-wave C wave. So the C wave will always be 5. And that's why the similarity between a C wave and a third wave, the longest or a longer wave structure and a very powerful. C waves can be very powerful and very quick. So we'll wait and we'll see. So I'm leaving it on there for now. I don't think right at the moment that we're going to swing and go back up and reach that next level up. If we stop here and we were to catch fire and just really start to roar, for the move, our next level would be 61.91, and then we're talking about the top end from minute wave 5. So I would be able to say that's very, very, very minuscule wave 4. And I don't think actually, even if I open this up as much as I can, there's nothing to it other than it's like working a 5 down. And so we're looking for A, B, C for the 4, and we're looking for 1, 2, 3, 4, 5 if it's going to be that C wave, which leaves us open to run all the way back up. So that is actually it for today. Keep it on a little bit on the tight level. Now let's take a look, because tomorrow, pre-market, we have the non-farm payroll, so the U.S. employment report, and the consumer those are at 8:30 a.m. Eastern. At 10 a.m. we have consumer sentiment, and at 3 p.m. we have consumer credit, but it's more consumer sentiment, preliminary look. I don't think it's going to come out as a surprise. We have 1, 2, 3, 4 Fed officials out talking tomorrow, so I don't think they're going to say anything new. They're all basically saying that, hey, we're kind of on schedule. We're not going to be too aggressive. We're not going to be too hawkish or dovish about cutting rates. So that seems to be what they're talking about. And that is going to be it for today. The next daily update will be on Monday, December the 9th. And I will make a much stronger, since it's not a holiday, and I will be in town, I will get a weekly done and put out likely tomorrow after the close. I'll get that done. In the meantime, have a great weekend.